Change starts with an idea. R.A.G.E has that, something a little different, an idea that uses the existing infrastructure of S.G.I. We first want to address that we had a commitment from the CEO of S.G.I, Mr. Andrew Cartmell, that motorcycle rates would not change this year, no increases at all. This was a public commitment voiced at the scrum at the S.G.I building. Yet here we are with increases. Mr. Cartmell admitted he did say this, but that the issue of increasing rates are out of his hands. When asked whose hands they are in, his reply was a vague non-answer. So, really, who controls the rate increases at S.G.I? Are they being done fairly if it is done out of S.G.I.'s hands? We don't just bring complaining to the table. We understand that the auto fund must operate like a business. It has fiscal responsibilities, financial responsibilities, and we are not just asking for a handout. We're bringing a different financial solution to the table that is not all that different from how the Traffic Safety Board and S.G.I handled high-risk drivers prior to 2003. It's not all that different from how high-risk drivers are being treated in British Columbia or Manitoba, two of the provinces most like Saskatchewan in terms of Crown Corporation handling private vehicle insurance with little or no outside competition. In our counter-proposal this year, you'll not see a lot about motorcycles. You'll find out why as we go. R.A.G.E believes that good public policy should shape public behavior, in this case, high-risk driving behaviors. Otherwise, what's the point? In this context, we see a requirement to reduce high-risk driver behavior and target the revenue currently needed to pay for this increasing behavior, at the same time increasing the road safety for the rest of us. In 2012, $13 million was collected under the Safe Driving Recognition Program, SDR, via the one-time billing of high-risk drivers for convictions or tickets, at-fault collisions, and convicted Crown offenses. In that same year, $121 million in discounts, up to 20% for good drivers, was given for registering vehicles. With the difference, you would think we were the safest drivers in Canada, instead of the worst. The Safe Driving Program, SDR, put in place in 2003, was meant to target and curb high-risk behavior while at the same time rewarding the good drivers. It is a program that would have put any other insurer out of business by 2004. 2012 saw an $108 million shortfall in this program. That money comes from somewhere. Oh, where could that be? Certainly, the one-time billing fees for high-risk behavior haven't gone up at all since the program was put into place over 10 years ago. Yet, the cost to register our vehicles has changed 5 times now in 10 years. 100% of the cost of personal injury and wage replacement insurance rests on our vehicles. This is personal insurance and should be paid by all drivers. So those that register and plate 2, 3, 4 vehicles are paying for those that don't register any vehicles at all, yet drive. Many paying for mandatory personal injury and wage replacement insurance cannot use it or parts of it, yet they must pay for it under the existing structure. A la carte insurance would allow for them to pay for only those personal insurance needs they'd be covered for. The same old business plan of SGIs that has been in place since they were put in charge of the auto fund in 1984 is no longer working. Just increasing rates on vehicles is no longer working to curb the high-risk behavior. Placing all personal injury only on vehicles is no longer curbing high-risk behavior. Punishing us all to keep the cost down for the few who are high-risk drivers is not working. These high-risk drivers are not going down in numbers, they are increasing, or at least their high-risk behavior is. We want to remind everyone of what was in place prior to 2003, as that provides an alternate perspective and solution and demonstrates a reasonable, responsible revenue stream for the auto fund. According to SGI, auto fund claims and expenses are expected to outpace growth in premiums and investment. So, out of anyone's control are the market fluctuations. In SGI's control, 83% of costs stemming from claims. This is due to a large degree from high-risk behavior that is increasing. The escalating costs, again, increasing high-risk behavior is causing injury, income, and damage costs to escalate. Interesting is that in 2003, SGI stated that repair costs were a very small percentage of the auto fund costs. Yet today, a year later, they're the main reason for another increase. Should the rates paid to those who repair our vehicles not be done on a more regular basis so vehicle costs are not impacted to this degree at one time? Again, those high-risk drivers that drive vehicles but don't register them pay none of this increase. Are they not the main reason or part of the equation as to why vehicles need to be repaired in the first place? In 1946, the philosophy of the Auto Fund was adopted. All drivers are treated equally unless their driving record shows they are at greater risk for causing collision. Yet, despite the philosophy of the Auto Fund, SGI's business actions are that of all drivers are treated equally in spite of their driving record showing they are at greater risk for causing collision. All drivers are treated equally in that they must financially subsidize and protect high-risk drivers from the consequences of their driving behavior. Remember, the one-time billing amounts for high-risk behavior have not been looked at since 2003. Yet, since 2003, vehicle rates have changed 5 times. Risk premiums are imposed on vehicles, not drivers or their licenses. There are no dangerous vehicles. They pretty much do nothing until someone gets on them, starts them up, and begins to drive them. It is the driver behavior that is the risk, not the vehicles. This practice of just increasing vehicle rates has resulted in a segregation and isolation of customers based on vehicle type, not their own personal driving record. Utilizing the captive Saskatchewan customer base, subsidizing high-risk drivers. Charging valued customers over and over through license plate fees for the same personal benefit coverage, benefits already covered through other sources, and high-cost benefits they can never, ever collect. The more vehicles you register and plate, the more you pay for the exact same insurance as someone who registers one vehicle or no vehicle, yet drives, because it's on our plates. SGI has demonstrated ineffective business policies when it comes to vehicular safety, reducing accidents, and licensing and driver awareness. In fact, the current Auto Fund business practices are so ineffective that the proof is hard to miss. The Traffic Safety Department of Saskatchewan is also administered by SGI. In SGI's own words on their website, we try to improve road safety by examining yearly casualty collision statistics and traffic accident information system reports. That's the TAIS reports. So, their process when they determine a driver is at risk high enough to be monitored is a 2-part process. On the high-risk driver's license, there is a combination of those one-time billings that the fee structure hasn't changed on since 2003 and a driver improvement program. A driver may enter this program once they've reached -9 demerit points on their driver's license. If a high-risk driver drives yet does not register or plate a vehicle in their name, this is it. They pay no additional costs. They pay zero for their personal injury and wage replacement insurance based on their risk, yet are 100% covered in case of an accident. This is where SGI received $13 million from high-risk behavior. The other side is on the high-risk driver's vehicle. They will receive 0 discounts until they drive with no further infractions for a minimum of 3 years, if they register and plate vehicles in their name. We all know how easy this is to avoid in Saskatchewan. This is where SGI paid out $121 million in driving discounts. Remember, this is also where all our personal insurance is paid for, on vehicles. Yet, this is where SGI places all the increases due to high-risk driving behavior. Again, making the vehicles high risk, not the driver. The whole idea of private vehicle insurance is to create a premium pool or umbrella to spread the risk of the few over the many. This is according to SGI. Yet, SGI, our only private vehicle insurance in Saskatchewan, is no longer doing this. SGI began to try to make up for shortfalls due to high-risk driver behavior by pulling certain vehicles out of the shared risk pool in 2011. Again, making the vehicles the risk, not the driver. They started with motorcycles. No surprise, as this is exactly what Andrew Cartmel did in Ontario. He was hired for a certain reason here in Saskatchewan, as all CEOs brought here are for change. Make no mistake, do nothing, and all vehicles are next. SGI is doing this instead of implementing appropriate demerit fees on high-risk driver's licenses, implementing stringent suspension policies on high-risk driver's licenses, and implementing stringent criminal charge policy for high-risk drivers causing severe injury and death. Yes, they have done a review and changes to the Safe Driver Recognition Program, and some of those changes are coming into effect this year. They've made some stricter traffic laws around .08 and cell phone use, as well as some general traffic rules. Yet, the demerit fee structure, the cost to these high-risk drivers for high-risk behavior, has not been addressed. Why? Only the cost to our vehicles keeps going up. Why? They're doing this instead. What SGI's own statistics show, the continued vehicle rate increases is having zero effect on curbing high-risk behavior for 10 years. Trends in personal injury collisions, no effect. Trends in fatal collisions, no effect. Trends in all reported collisions, still no effect, the same from year to year. In fact, going up. SGI has the tools in their own TAIS report. They know the risks. The average yearly convictions, those are traffic offenses that people are ticketed for, continues to grow year after year. Right now, the average yearly number of convictions is 120,000 and continuing to grow. Total collisions, again, continuing to grow. Average criminal convictions, again, continuing to grow. Instead of continued excuses of, if we make the fines too high, people will drive without a license, or it is just a cash grab, make the high-risk drivers pay. They are the risk, not the vehicles. If they don't want to pay, they will change their behavior. If they refuse to change their behavior, they shouldn't be driving. So, hold them fiscally responsible. Cease general rate increase tactics to cross-subsidize high-risk drivers. Place financial demerits on high-risk drivers' licenses. Impose financial demerits on their license for a minimum of a 3-year period. Increase the existing minimum demerit rates from $25 to $250. Make them pay a higher fee for their own personal injury and wage replacement insurance. Put this on the driving license so it's based on their driving record. Not zero because they don't plate a vehicle in their name, yet they drive. Stop the trends. Now, if we go back to what SGI was doing prior to 2003 with the 3-year surcharge on a high-risk driver's license that was determined by their risk due to repeated and continued driving offenses. Yes, some of us are old enough to remember that. We can see what it looks like. Today, in those provinces that operate similar to Saskatchewan what Saskatchewan used to operate similar to. In British Columbia, any at-risk behavior stays on a driver's license for 3 years. Their risk is rated in 3-year windows. Every year they're given a rating based on that 3-year window. The average infraction is $320 per infraction per year to a maximum of $24,000. In Manitoba, all driving infractions stay on the driver's license for 3 years. They're rated yearly based on how they drove that year. At-fault accident premiums are $320 per infraction. And for example, a speeding infraction could cost you anywhere from $120 to $900 a year for 3 years. So if we take only the yearly average incidences and convictions of high-risk drivers and apply the 3-year surcharge here in Saskatchewan, we get $48.5 million in 2012 instead of the $13 million that was received. This is a 3-year cumulative number, so had this been in place in 2010, in 2012 SGI would have received $145.7 million. This would definitely offset the $121 million in the 20% safe driver discounts that were given out. This would be a good business model to follow. If they adopted this model today, after 3 years, every 3 years, there would be approximately $408.5 million based on driver's licenses, not vehicle plates. This is meant to be a self-healing policy, getting people off the road or getting them to shape their behavior according to what the dollars say. Jack up the rate wheel on the high-risk behavior until it starts to change. You want people to pay attention. Do this. Reducing high-risk behavior will mean a reduction in claims, accidents, and less of us using our insurance. Meaning there will be no need for rates to go up unless it is to offset the cost of inflation. Private insurance makes high-risk drivers pay based on their driving record and other factors. SGI would be doing this only on the driving record, following the philosophy of the auto fund. Hard to argue with that. So in conclusion, we think the Sask Rate Review Panel should reject the SGI 2014 Auto Fund rate application. We tried last year, we brought a solution to the table. Some of the things have come forward, but to allow these trends to continue year after year, well, that's just poor business practice. What we have put on the table may actually not need changes to legislature. It may only need changes to the demerit fees already in place. So, in light of what happened last year, we would like the Sask Rate Review Panel to recommend, as we all know what the SGI does with suggestions, that SGI put in place changes to get back to the philosophy of the auto fund. All drivers are treated equally unless their driving record shows they are at greater risk at causing collisions. Not vehicles, the driver. Roll our rates back to pre-2012 rates with no rate increases to motorcycles until the results of the implemented changes are known. All personal insurance to be paid for one time by all drivers based on personal driving records and vehicles driven. Thank you.